Ladies and gentlemen, esteemed leaders and colleagues, it is both an honor and a privilege to discuss a vision for the future of Pakistan's microfinance sector, a sector that holds tremendous potential to drive financial inclusion and economic empowerment across the nations. As we gather to explore this vision, we must recognize the magnitude of the task ahead. Financial inclusion is not simply an economic issue. It is a matter of social justice and equality. We must strive to create a system that empowers individuals regardless of their socio-economic status. We must strive to create a system that empowers individuals regardless of their socio-economic status or geographic location to access financial services that can transform their lives. This call for a comprehensive and bold vision tailored to unique challenges of Pakistan while harnessing the opportunities we have at our disposal. While significant strides have been made, we must acknowledge that we are far from reaching our full potential. The outreach of Pakistan's microfinance sector currently touches the lives of 10.5 million borrowers. However, this number pales in comparison to the needs of our population, which exceeds 230 million. This stark gap demands a strategic recollaboration of how we deliver financial services. Financial inclusion should not merely be about providing credit. It must be about creating lasting and sustainable change in the lives of individuals and communities. The journey to achieve this vision will require us to address multiple challenges, scale our efforts, and bring transformative products to the market that respond to the unique conditions of Pakistan. One of the most pressing challenges is the multifaceted capacity of microfinance institutions to serve Pakistan's vast and diverse population. Despite having over 50 institutions operating across the country, many remain undercapitalized, constrained by outdated systems, fragmented operations, and insufficient skill set and workforce capabilities. This makes it difficult for these institutions to scale their services in a meaningful way. This calls for microfinance accelerated program, and I see this conference as one such endeavor in that direction. The program should focus on access to subordinate credit, upgrading technological infrastructure, streamlining operations across MFIs, and developing a unified platform that all institutions can leverage. Such a platform would not only standardize procedures, but also drive efficiencies by reducing operational costs and minimizing the complexities that currently shackle service delivery in an impactful way. Ladies and gentlemen, we must invest in human capital by offering targeted training in collaboration with academic institutions. These programs should focus on building a workforce which is not only technologically focused, but also understands the nuances of servicing low-income populations and addressing the unique financial needs of underserved communities. This is indeed a specialized area. Another key challenge we are confronted with is the limited demand for microfinance products, especially among critical segments like women and youth. In Pakistan, cultural norms, limited mobility, and lack of asset ownership remain significant barriers that prevent women, particularly in the rural areas, from fully participating in formal economy. While various women-focused initiatives exist, they are often limited in scope and have not reached their full potential. Only 22% of women in Pakistan are part of the formal workforce, a percentage that lags behind our regional peers such as India, where the number is closer to 30%. The global average is 38%, by the way. And if we only achieve that number, the impact on our GDP would be substantial. To address this, we need a targeted approach focused on empowering women economically. A dedicated women's financial empowerment program should be developed to focus on sectors where women play a dominant role, such as home-based businesses, agriculture, and livestock. By providing tailored financial products coupled with non-financial support like mentorship, business training, and digital literacy, we can help women overcome the barriers they face in accessing financial services. Similarly, we must tap into the potential of our youth by offering youth-specific microcredit programs. By linking these loans to vocational training and entrepreneurial development initiatives, we can create opportunities for young people to start their own businesses, especially in the informal economy, where most of them currently find employment. At this stage, I would also like to emphasize that microfinance must look at educational loans. I am very well aware of the total constraint in the amount microfinance institution can offer as funding, but nevertheless, that would still be a big support for the youth than not having access to any educational loans otherwise. The lack of sufficient funding and weak linkages between MFIs, government bodies, and international donors remain persistent hurdles that limit the scalability of microfinance in Pakistan. While large institutions may have access to various funding sources, smaller MFIs struggle to secure the capital they need to expand their reach. Establishing a National Microfinance Innovation Fund would help bridge this gap. This fund, supported by international organizations like the World Bank and the Asian Development Bank, could offer grants and matching funding to MFIs that propose innovation solutions tailored to the needs of rural and low-income populations. This fund, supported by international organizations like the World Bank and the ADB, could offer grants and matching funds to MFIs that propose innovative solutions tailored to needs of rural and low-income population. Such innovations could include digital financial services, green finance initiatives, and gender-specific lending schemes. Furthermore, we could explore blended finance models where concessional funding from international donors is combined with commercial bank financing. This would also help in de-risking financing to the microfinance sector and provide MFIs with access to more affordable credit. A risk-sharing mechanism co-developed by the State Bank of Pakistan and leading commercial banks would be instrumental in this regard, allowing for greater coordination between MFIs and larger financial institutions. Digital penetration remains another critical issue, especially in rural areas where the majority of Pakistan's unbanked population resides. While mobile phone penetration has increased significantly, internet access and the adaptability of digital financial services are still lagging behind. To address this, we must create a microfinance digital highway, a comprehensive digital platform that enables the delivery of financial services in low connectivity areas. By collaborating with telecom companies and fintech startups, we can create a platform that integrates offline services with digital solutions, allowing people in remote areas to access microfinance products without needing internet connectivity. The use of USSD technology is a perfect example of how we can bridge this gap, as it allows for simple text-based transactions that do not require a data connection. Coupled with financial literacy campaigns tailored to the unique needs of rural communities, this approach will not only broaden access but also ensure that the individuals are empowered to use these digital tools effectively. To effectively enable the microfinance industry to meet Pakistan's financial inclusion objectives, a comprehensive and multifaceted strategy is an absolute must, targeting product diversification, regional outreach, digital transformation, sustainable solutions, and partnerships. Let me repeat, and the most important one is the partnerships. This demands a shift from the current narrow focus of the microfinance sector to a more holistic and inclusive framework that addresses the evolving needs of underserved populations across the country. By integrating new products, expanding geographic reach, leveraging digital innovation, and fostering partnership with commercial banks, this approach will significantly enhance the ability of microfinance institutions to contribute to economic development. One of the fundamental pillars of this vision is product diversification. Currently, the product range offered by microfinance institutions remained limited, typically focused on short-term microcredit loan designed to meet immediate liquidity needs. However, for the microfinance sector to truly uplift underserved communities and drive long-term financial empowerment, this product portfolio must be expanded to include a broad array of financial services. For instance, longer-term loans should be made available for essential items like homes, motorbikes, cars, and mobile phones by connecting recovery of loan repayments and debt servicing with utility bills, a structure on which the banking industry under the leadership of PBA is currently working on with the government of Pakistan. These larger long-term financial commitments can significantly improve the quality of life for low-income households by facilitating access to assets that improve productivity, mobility, and connectivity. Moreover, beyond credit, MFIs must offer a wide array of complementary services such as savings accounts, microinsurance, and very importantly, remittance services. Providing formalized savings options will help individuals build financial security over time, allowing them to cope up better with the economic shocks. Microinsurance can protect against unforeseen events, whether it's health related or linked to a natural disaster, which disproportionately affects low-income communities. Remittance services too are crucial, especially given the large number of Pakistanis working abroad who regularly send money back home. Integrating these services within microfinance sector ensures a more comprehensive financial safety. Integrating these services within the microfinance sector ensures a more comprehensive financial safety net for low-income populations, enabling them to manage and grow their financial resources more efficiently. With the rise of the gig economy, particularly in the freelance sector, specialized products catering to freelancers must also be developed. These could include short-term working capital loans, health insurance, and saving products tailored to irregular income streams, helping freelancers manage their finances in a sustainable manner. Equally important is the need to expand microfinance services beyond their current geographic limitations. At present, MFIs primarily focus their operations in Punjab and Sindh, leaving other regions underserved. This geographic imbalance means that large swaths of the population are excluded from the benefits of microfinance. To rectify this situation, MFIs need to expand their footprint from the conventional two provinces, tailoring products and services to meet the specific cultural, social, and economic context of each region. In many cases, this may involve establishing partnerships with local organizations or community leaders to better understand the needs of populations and building trust within these communities. A more balanced geographic distribution of microfinance services would not only promote financial inclusion but also help address the economic disparities between different regions of the country. By creating opportunities for entrepreneurship, income generation, and asset building, MFIs can build a critical role in promoting regional development and stability. In addition to expanding geographically, the microfinance sector must embrace digitalization as a key enabler of financial inclusion. Digital financial solutions, including mobile wallets and the integration of credit and debit card systems into microfinance platforms, offer immense potential to bringing financial services to those currently excluded from formal banking system. Mobile wallets in particular have already revolutionized financial access in many parts of the world, enabling individuals to make payments, transfer funds, and manage their accounts through their mobile phones without needing access to physical bank branch. In fact, in this context, I'm very thankful to Irfan Ali Saab, who mentioned and discussed with you the Kisan card that the Bank of Punjab and the Government of Punjab is launching very soon. In fact, it's planned for the 15th of October, whereby we have actually practiced what we are preaching right now. And we must encourage you all to watch that space very closely, as there may be lots of learnings there. This whole proposition is especially important in rural and remote areas where traditional banking infrastructure may be lacking or difficult to access. These financial mobile wallets can be linked to microfinance products such as savings, insurance, and credit, offering a seamless and convenient financial experience. The introduction of credit and debit cards as part of microfinance offerings would further empower users by giving them greater control over their financial transactions and access to a wider range of goods and services. These digital tools not only increase convenience and accessibility, but also help improve financial literacy as individuals become more familiar with managing their finances in a digital ecosystem. To achieve this, partnership with fintech, mobile network operators, and payment service providers will be crucial, as they can provide the technological expertise and infrastructure necessary to drive the adoption of financial services at scale. Another essential component for the development of sector is the promotion of climate-related and sustainable financial products. As Pakistan faces increasing challenges related to climate change, such as rising temperatures, unpredictable rainfall, and frequent natural disasters, it is imperative that the financial sector contributes to climate resilience. MFIs can play a pivotal role by offering products that support the transition to a green economy. For example, microfinance could be used to finance the purchase of electric vehicles, such as electric motorbikes and rickshaws, which offer a cleaner and more affordable transportation options for low-income individuals. Similarly, loans for solar power installation can help households and small businesses reduce their reliance on conventional energy sources, lowering both their carbon footprint and energy cost in the long term. By integrating climate-friendly products into their portfolios, MFIs not only contribute to environmental sustainability, but also create new business opportunities that benefit both the borrower and the broader community, give them access to the cheaper funding sources, which remains the biggest impediment in the growth prospects of MFIs. Targeting specific segments within the population is also crucial for achieving greater financial inclusion. To support the expansion and sustainability of microfinance sector, linking MFIs with commercial banks is essential. Partnerships between these two sectors can provide MFIs with access to greater sources of capital, allowing them to increase their lending limits and offer wider range of products. Commercial banks can also support MFIs in terms of risk management, compliance, and operational expertise. The future of microfinance in Pakistan lies in its integration with formal financial institutions. The microfinance sector must build stronger linkages with commercial banks, not just for funding, but also to offer more advanced products and risk management services. A robust MFI bank convergence strategy could enable commercial banks to partner with MFIs on large-scale lending for M and SMEs, with MFIs acting as the ground agents handling smaller disbursements. It doesn't necessarily mean that the MFI has to extend funding as well, but they can perhaps provide the necessary foot support to the banks for lending to this micro and SME sector. Introducing shared risk management frameworks supported by the State Bank of Pakistan's Credit Bureau and the other private credit bureaus would improve credit assessments and make lending less risky for commercial banks. These partnerships can also help bridge the gap between informal microfinance services and the formal banking sector, facilitating the inclusion of underserved populations into the broader financial system. Private-public partnership, another area of my personal interest, represent another avenue for supporting the growth of microfinance. Through collaboration with government entities and private sector players, MFIs can access the resources, including funding, technology, and expertise needed to scale their operations and improve service delivery. I must quote here the example of Akuwat, which has achieved this collaboration in a very effective fashion, both with the government and with the large government entities like OGDCL. PPPs could focus on areas such as infrastructure development, digital inclusion, financial literacy, and promotion of green energy solutions. For instance, partnership between the government and the microfinance institutions could help promote solar energy adoption in rural areas with financing provided by MFIs and technical expertise offered by the private sector. The creation of centralized data repository, another constituency that I am in love with these days, modeled on the National Integrated Data Archive, NIDA, or it could also be called a data exchange, is a key innovation that could greatly enhance the efficiency and reach of microfinance services in Pakistan. By partnering with agencies like NADRA and PITB, such a system would provide microfinance institutions with real-time access to critical client information. This access would simplify the lending process, reduce fraud, and cut down the cost associated with verifying borrower credentials. The establishment of NIDA would offer numerous advantages, particularly in enhancing transparency and streamlining processes for MFIs. by integrating data of key entities such as NADRA, FBR, power utilities, telcos, banks. It would provide a unified, up-to-date source of information, enabling NFIs to conduct more accurate risk assessment and tailor products to specific client needs. This system would also improve governance by reducing data duplication and ensuring that only authorized entities have access to sensitive information, thereby strengthening trust between borrowers and financial institutions. Additionally, NIDA's or data exchanges data analytics capabilities would allow MFIs to generate reports, identify trends, and make data-driven decisions, ultimately driving efficiency and expand financial inclusion. I have huge satisfaction in sharing with you that as PBA, we have already started working on this jointly with Karan Das to develop something around NIDA, whereby we could see some kind of activity being housed at one place and an excess of data could be provided for improving financial inclusion, as I just said. In conclusion, the future of Pakistan's microfinance sector lies in its ability to move beyond providing basic credit services and evolve into a holistic financial ecosystem that empowers all citizens. By leveraging technology, forming strategic alliances, and focusing on underserved populations, we can build a system that not only expands financial inclusion but also strengthens the very fabric of our economy. It is time for Pakistan's microfinance sector to realize its full potential. The path forward may be challenging, but with vision, commitment, and collaboration, we can create a future where every citizen has the opportunity to build a secure and prosperous life. At this end, it's all about collaboration. Collaboration, collaboration, and collaboration between banks and microfinance entities, between governments and microfinancing organizations, between international DFIs and microfinance, between society and microfinancing, between industry and microfinance, between academia and microfinance, and the list of opportunities to connect goes on and on and on. It's all about ecosystem. It's all about developing and nurturing of ecosystem in the business of microfinance. I would strongly recommend PMN to consider it as a theme for the conference next year. I wish you all the very best and success. Thank you very much.